Hi everyone. Today let's talk about why that recession hasn't happened quite yet. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the secret to stock market success and why the recession has not happened yet. They say the central bank has been helping out the buy and hold and the buy the dip investors. But let's take a look at why we haven't slipped into that recession quite yet. They say it's been a long winter for the bears, busy season for the stimulus. So we've been seeing stimulus across markets, but now that is starting to come in with the country's runaway inflation trying to tamp that down, as well as the sudden rise of the Japanese currency, the yen, also sparking concerns in the markets. You can see during the rate hikes, markets were coming down. Now we're seeing cuts, markets are rallying through. And they say basically the same thing I've been saying for a long time. We've been looking for those recessionary indicators, and there have been plenty of them out there. But so far, that just has not happened yet, and markets continue to tick higher. They also mentioned that the economy is not the same as the stock market. The economy has been humming along. The job market has been pretty decent, not amazing. They say it's bustling here. I don't know if I would say that. Consumer confidence and consumer spending has stayed quite strong in goods and services, which tend to be when the stock market is at its strongest, which is what they're highlighting here. They also mention there were years of zero interest rates, massive bond purchasing programs during that time period, so people locking in super low rates, potentially allowing the market to stave off some of those downturns. They also mentioned some of the similarities to the Nikkei, which also had some terrible times after it had that massive run, and just now recently got back into some of those same levels. In terms of central bank balance sheet, you can see the Fed and the ECB have been selling off, but the Bank of Japan has been holding pretty flat in that same area. So we'll see how it plays out. Eventually, markets tend to follow the money supply. We've been talking about that for a while. But so far, all of the recessionary indicators have been wrong. You had the inverted yield curve, which is back into normalized conditions, which typically means that a recession is on the horizon. They show that here with the credit funding program as well as the bank funding program. But the yield curve is in normal conditions. You want to compare that to the 2008 area where you have the inverted condition. Here you get those kind of crazy spike ups, recessionary period, and then it gets back into normalized conditions somewhere in there. But we had a little bit of a spike up. We're a little bit concerned, but we're already in normalized conditions and we haven't seen that recession come quite yet. We also had the SAM rule. We talked about that when it happened. The jobs data weakening, unemployment rate going higher. Does it technically meet the indicator? Definitely some disagreement on that, but was this a false indicator? Hard to say quite yet. Typically, very, very accurate indicator, and it did flash red if you look at it, not with any of the external factors. And then the evolution of productivity. A lot of stocks have been continuing to stay very, very productive. You can see it here. The US did rally aggressive, slight pullback, which is kind of what markets did, and now we're waiting to see if this continues higher. But the other countries have been going pretty well straight up. Economies tend to expand over time, which has been doing well. In terms of opportunity, they say consider the equal weighted S&P so you're not nearly as concentrated in those big tech stocks, mostly the Mag 7. Otherwise, S&P 500 is the way to go based on this. Kind of a simplistic recommendation in my opinion, but overall diversification, mixing your portfolio should give you a better opportunity over the coming weeks. Looking at fear and greed, we finished the week at a 61 from a 44, so it was a pretty strong week. Obviously, markets rocketed up on the election, and you can see that here. And then looking at momentum, extreme greed while strength and breadth are still sitting in fear. A little bit weird to see that, but price action is king. Breadth really hasn't gone with it. Really, it's the Mag 7 that's been leading us higher, and really it's been Tesla out of that group that's been rocketing higher here recently. Put call ratio pulling back makes sense, neutralizing. Volatility also neutralizing down into that 14 level. We'll look at that later. And then safe haven demand down into regular greed, starting to see that pull back a little bit. I think bonds are going to outperform here over the next week. We'll see how that plays out. And then junk bonds, still extreme greed as those continue to rocket higher and demonstrate that there is a risk-on environment going forward, at least for now. Moving over to the AAII survey, the bulls did step up here a little bit, makes sense with markets rocketing higher. Neutral, basically flat, bears getting squeezed a little bit, so we'll see if this continues to drift in this direction. This is the first kind of step this way, but it is worth mentioning that markets are hitting some key areas of resistance, and I'm not sure that this is really going to drive price, but for right now, it is drifting towards the bull side. Moving over to seasonality, you can see this is supposed to be a bearish period. We're supposed to see the low of the week on the 12th, so a little bit of bearishness into here. We didn't obviously get this move, but we'll see how it plays. I haven't really been covering it because it's not been super useful, but you can see 21st of the month is the low of the month, 12th the low of the week, and then once we hit these periods, it's supposed to be really accelerated to the upside. Again, we really accelerated this week. We'll see if we get any of that bearishness over the next week or two. We're definitely extended, but that doesn't mean that markets need to fall. Moving over to the calendar, you can see Veterans Day typically bearish. Up 13 of the last 20, bond market's going to be closed. You do get CPI and Treasury budget here for the Wednesday, and then this is a third week options expiration, so we'll take a look at Max Payne. And there is a little bit of data there on the Friday, retail sales, business inventories, imports, exports, not a whole lot, but third week options expiration up 16 of the last 22, which is relatively bullish. Moving over to earnings, there is a little bit left here. We do have Home Depot, AstraZeneca, Occidental Petroleum, Live Nation. They've had some weird news recently. Tyson Foods, Mosaic, Cisco, Walt Disney, and Ross Stores to wrap up the week. Not a whole lot, but a little. Moving over to the economic calendar, nothing for the Monday. A couple of Fed speakers here Tuesday. Consumer expectations for the New York Fed, fairly interesting. CPI data, obviously the big one for the week. That's going to be interesting to see how that flexes, especially with interest rates starting to come down. And then looking at Thursday, a little bit of interesting data. Initial jobless claims, always interesting. Core and headline PPI. You also have Chair Powell speaking at 1500. I'm sure he'll reference some of that data. And then the Fed balance sheet got below $7 trillion here last week. So that's going to be interesting to see if that continues to trend lower. That should help the inflation data, but we'll see how that plays out. And then looking at Friday, core and headline retail sales, and then a little bit of other economic data, Atlanta Fed GDP, nothing crazy, but retail sales is definitely going to be the big one. Moving over to Max Payne, we've been talking about how it is much lower, and it continues to be much lower for the Friday, 572. Current stock price up around that 600 area, and you can see bearish all week for those Max Paynes. Slight step up for the Monday, 591. But still negative from current price. And then the Friday, very bearish, 4.5% or so. Slight pop into the 18th, 19th, and then very bearish after that. So big swings. We'll see if that ends up playing out. Overall, it looks like these are pretty bearish. Pretty weird numbers out there. You can see 18 June from 2026, nearly 50% higher from here. But before that, you got 13% lower in December. So pretty crazy numbers. We'll see if we end up getting those swings. Even this looks really sketchy, but we'll see. Definitely interesting and slightly bearish for the next week. And then since this is a third week options expiration, let's take a look at the regular Max Payne. You can see some put walls at 572, call walls 580. Remember, current stock price is right around 598, so way higher than some of these levels, even though a finish does make sense between 572 and 580. So relatively bullish. Put call ratio still being quite high at 3.5. Total options quite a lot. 3.2 million for the SPY. And then looking at those open interests, 590 is your biggest put wall, call wall at 600. So that would give you the idea of a slightly bearish move as well, which does fit with the other Max Payne. Moving over to the charts, looking at the S&Ps here on the weekly, you can see I had to add this trend line here because we did break out of my upper trend line, the target I was looking for. Momentum's bullish, RSI is bullish. You can see the RSI is continuing to trend lower, but right now we're above the SMA. And if we did hit this trend line here, that would give you a target of 6,080. We'll see if we end up hitting that area. But for right now, it's slightly bullish. And then jumping down to the daily chart, you can see that level here. Broke through this level, pushing up to this one around that same area. Momentum bullish, RSI nearly overbought, same as what we saw on the Friday video, but looks like we're going to go just a little bit higher, even though we're starting to slow down on this push. And then moving over to the charts, looking at the SPY here on the weekly, you can see we broke out from this kind of channel that we were in. We broke all these longer term trend lines. I had to add this thinner one here, which gives you a price target around 6,080 or so. Momentum bullish, RSI bullish, big breakout here. And if you go to the biggest time frames, you can see there is one more level, but it's way up there in the 7,000 area. I don't really think we're going to get there anytime soon, but right now we've broken out of all of these short time frame trend lines and the medium time frame ones, so everything looks super bullish. And right now the target is that 60-80 level. And then stepping down to that daily chart, you can see that same move here, looking for that trend here. Clean breakout, pushed right to the level, broke through it over the last 2 days. And then just trying to give this some structure. This is what I've been watching, this trend line from this top to this top. If we markets get a triple top at that level, that's where we're going to be. And then looking at the SPY daily chart, I did put a new level at the all-time high. That's that 599.64 level for the SPY. Everything still looks bullish here as well, but looking for a breakout here to see if we can push to this trend up around that 613 area. Just to give you some context, this is that trend line here. So it marks kind of a consolidation here, a top here, pushed through it and then broke back through, so we didn't maintain any levels above it, and now we're pushing back to it, seems like, potentially over the next week, maybe 2 weeks. Moving over to the Tasty charts here, you can see we did get a really strong up candle, looking for that upper ATR band, which is at 606.61, which is about $8 higher from here, about another 1.5% potential. You can see that's where we hit and started to see these rejections from that zone. So we'll see if we get the continuation up to that area. That'll obviously trend up a little bit more in next week's candle, maybe up to the 613, 612, somewhere in that area. But right now it still looks bullish. And then looking at the daily chart here, you can see that upper band was the resistance. That's at 598.78, which is basically right where we closed. And that'll continue to trend up. Are we going to grind along that level? We've definitely seen that before. We can see a little bit of grinding action right in that zone, continuing to go higher once you hit it. But in terms of these kind of fast style moves, big jump style moves that we've been seeing, that's probably going to slow down here in the next week. Could see a little bit more grinding up towards those upper levels that we saw on the weekly chart. And then moving over to the NASDAQ here on the weekly chart, you can see that big up candle, 5.4%. Broke through this trend line here and the next one, which I was watching as a potential zone of resistance, but clearly we've broken out momentum bullish, RSI bullish. Your next trend line would be up at the 22,393 area. We'll see if we can get up into that zone or not. Right now, everything still looks bullish, so we'll see if we get another stacked candle. It was a very powerful candle, so maybe we get a little bit of sideways before we get the continuation, kind of like this. But for right now, everything still looks good. And then looking at that a little bit closer here on the daily chart, just like we've been talking about all week, there are gaps left behind. Wouldn't shock me if we saw some kind of round trip move. Retrace this, fill the gaps, and then get the continuation up. Momentum still bullish, RSI nearly overbought already on the daily chart. And then looking at the Qs, we're watching for this trend line here, up around the 527 area, 528. Current all-time high is 514.92. Momentum bullish, RSI bullish still. Looking for a break, retest, continuation from that new all-time high. Moving over to the NASDAQ on the Tasty charts, you can see on the weekly that second ATR band is your current target. That's at 516.21, so that's about $2 higher from here. Momentum stepping to bullish. It's been stepping to bullish for the past few weeks. Getting this continuation off of that 8 EMA, strong push. Upper ATR band, if we did end up getting there, is all the way up at 538.55. You can see once you get these kind of colossal moves like this, it does eventually hit that upper band. Whether it does it in 1 week or not probably seems unlikely, but probably will get there at some point. And then looking at that daily chart, just like the SPY, you can see the upper ATR band is your current resistance. That's at 515.23. Touch that level, pulled back slightly from there. Big volume on the up candles. Again, you would expect buying price action to come in. If this did pull back slightly, start to fill some of these gaps, your ATR trailing stop on the daily is sitting at 491.41. So that does give you a lot of downside potential before you see a change in conditions. Either way, I would expect this to get bought up. Moving over to the Russell here on the weekly, you can see that massive week, 8.7%. Clean break through all of these levels. I would expect it to continue at least to the all-time high. I have a level here at 241.05. And then I added one here now at 244.46. That is the all-time high going back here to the week of 8 November 2021. So it's been a long time, but we're finally getting back into it potentially. You can see that was a big wick rejection before we got this continuation lower into this downtrend, before we've seen this strengthening of structure here. You could argue this is your base, this is your breakout. Everything continues to look good here. If it breaks and pushes to the trend, that's going to be up in the 250, 252 range, somewhere in here. Is it going to happen in 1 week? Probably not, but who knows? I would expect some continuation though. And then looking at that daily chart, really no change to the structure. Everything still looks bullish. Looking at that 238.02 level, technically closed above it, so we should see the continuation to 241 or so. Moving over to the Tasty charts here for the Russell, you can see we're headed towards that upper ATR band. That is currently sitting at 245.66. It'll step up one more time here for next week, somewhere in the 249.66 area. We'll see if it can get there. Otherwise, when we do get into this zone, usually that's the top of the move. You can see it here, touch that level, pull back, touch that level, pull back. Right now, it seems like we're going to get there, touch the level, and then I would expect to see some pullbacks from that area. But for now, a little bit more upside, touch the zone, and then we'll see what happens after that. And then looking at the daily chart, you can see we're already extended. Makes sense why we were sideways choppy there for 3 days in a row. wouldn't shock me to see a little bit more of that. You can see big overextension, sideways choppy, and then we ended up pulling back. Hit the lowest band, sideways choppy, and then rallied up. So usually once we get into these areas, that's where we start to see markets either slow down, pull back in time, and then rally, or just a straight pullback, higher low setup, and then continuation. Moving over to the Dow here, you can see we did push right into the areas we thought that we would once this trend line broke. Hit this trend line almost to the penny there, 441.06. High of the week was 441.70, so right in that same range. Touch that level, slight pullback. For next week, that area is going to be 443.67, maybe a slightly higher somewhere in here. Momentum bullish, RSI bullish. If it breaks out from there, don't have a ton of structure to the upside right now, but we're at those areas of resistance. Again, kind of a theme here in the short term. Grinding price action, not expecting huge moves. Then looking at the equal weighted S&Ps, strong candle here as well, 4.37%. Hit the trend line again, almost to the penny, very similar to the Dow. Touched that area. Target was around here at 184.30. The high of the week was 184.47. So touched that, pulled back slightly. Next week target is going to be somewhere in here, 185.24. I would expect some grinding price action. If we go ahead and extend out this trend line here, that would give you a target up in the 187, 188 area. We'll see if that continues. Momentum bullish, RSI bullish, really no changes. And then looking at that daily chart, you can see the huge gap up, sideways consolidation, continuation on Friday. Looking for that zone. We'll see if we get any pullbacks. Support is still going to be the 182.22 level. This is all-time highs here for the equal weighted S&Ps. Moving over to the ratios, these did exactly what we thought they were going to do. So we got massive Russell outperformance off the rejection here, continuation lower, broke all these levels, should head a little bit lower down to that 242 area. Let's go ahead and extend out this trend line here. Gives you a target somewhere in that same vicinity. Momentum bearish, RSI bearish. Seems like the Russell is going to start finally hitting that turning point and continue to outperform here for a little bit, in my opinion. And then looking at the NASDAQ SPY, same thesis as before. Let's go ahead and extend that out here. Hit that target over the last 2 weeks. Hopefully we break through that, get to the 355 area. Either way, momentum bullish, RSI bullish, in a zone of resistance, waiting for that cleaner break to the upside. I do think it'll do it. I think this is accelerating here. So SPY seems like the worst. Russell probably the best, followed in the middle by the NASDAQ. Then moving over to the SPY divided by the M2 money supply, obviously this broke out here. I tried to give it some new structure. You can see I added this trend line to see if we're going to be more of a trend style here. We were watching this as a rising wedge, but now we have that clean move up. We'll see if we push up to the trend here. That would give you a target somewhere in the 29.49 area. Obviously, we're going to need to break that 28.50 level. We're right at it now. The high of week was 28.42, so just short of it. Waiting to see if it can break here and get the continuation up to here. Momentum bullish. The big concern for me is that this RSI continues to weaken as price continues to go higher, but price action is king. As long as price action keeps going, that divergence is going to keep forming. Eventually it will break, in my opinion, but for now, big strong candle, expecting continuation off of it. Moving over to Mag 7 on the weekly chart, really the same as everything else. Very strong candle, 7.18% momentum bullish, RSI bullish. Trend line sitting up here at 310. We broke all the levels, all-time highs here for the Mag 7 as we head to that 310 area, in my opinion. Really no change to the thesis. Everything continues to be very, very bullish. Got a test of the all-time high last week. This week we got the continuation, and I would expect some more next week. Moving over to Apple and Microsoft, both of these lagged markets pretty substantially here, 1.81% and 2.97%. Microsoft looking quite good on the week, except for the fact that we hit that 21-week moving average at 426.10. The daily chart on Microsoft still looked pretty good in the short term. Still watching this structure on the weekly to see if it does break down from here. The weekly chart does not look nearly as good. We're kind of stuck between the 21 and the 55 EMAs, so we'll see which one of those ends up taking it, with the weekly looking bearish, but the daily looking fairly strong. And then looking at Apple, same thesis here. We're stuck between the 21 and 9 EMAs. Momentum bearish, RSI bearish. Did manage to get above the 224.36 level, but now we're stuck below the 230.28 level. We'll see if this ends up breaking. If it breaks here to the upside, then you could look for a target somewhere around 236. If it breaks back down, looking for a test of that 217.62 area. Either way, sideways choppy action. We're in the same price action we've been in since August here for Apple. Not expecting major moves. And then looking at that medium term for Microsoft, this still looks bearish, like I said, so we'll see if that follows through to the downside. Interesting to see the daily and the weeklies on Microsoft looking so different. Moving over to Tesla and NVIDIA. Tesla had a absolutely incredible week, 29.01% momentum bullish, RSI bullish. If it hits this upper bound, let's go ahead and extend that out. That would give you a target in the 344 area, which is just barely above my 336 level. That's nearly all-time highs here for Tesla. You can see this consolidation high. I'll throw some levels in here if this breaks out, but for now, 336 is your level. If the 324 level breaks, and you can see that here, that was your resistance for this week. Obviously, everything's super powerful. I talked about this on Friday. I'm not sure really that Tesla is going to benefit super strongly from the election. Is the government going to back Tesla in some way that's going to validate this valuation? We'll see. Hard to say, but right now, sentiment is very bullish there. And then NVIDIA, same thesis really. Still bullish in all conditions. New all-time highs here. You would expect a continuation. Right now, the trend resistance would be around 253. Momentum bullish, RSI bullish. Clean break to the upside. Obviously not nearly as dramatic as the Tesla move, but maybe a little bit more sustainable. Something to watch for. 144.42 is your support if it pulls back from there slightly. And then you got some trend support in here around 142.80. My level 140.76. Moving over to Amazon and Google. Amazon had a massive week, 5.18. Google had a good one as well, 4.18%. Big moves on both of these. Did just barely hold above 179.42 on Google. Want to see it push to 185.22. We'll see if that area ends up being resistance. Momentum bullish, RSI bullish. I think this has a little bit more in it. Doesn't look as strong as Amazon, but this is a key area of resistance. Still all-time highs. New high is 212.25. And we'll go ahead and put a level there, see if it can get above it and hold as some kind of support. Right now, obviously very, very bullish, waiting to see if it can continue higher through these levels. Overall, I like Google a little bit better just because there are some levels to work with, but structurally, Amazon is a little bit stronger. Moving over to staples and discretionary. Staples was positive 0.84, still in this bull flag in my opinion. Looks like a clean bull flag, still waiting to see if we get that breakout to the upside. And then looking at discretionaries, massive week, 7.5%, bullish momentum, bullish RSI. It's overbought now at a 72.73, and you can see it closed at 215.12. The all-time high was 215.06 going back here to the week of 22 November 2021, so it's taken a long time to round trip that move. But right now we are at that level almost to the penny. The new all-time high was 216.27, but obviously I wasn't able to hold those gains. We'll see if it breaks out, continues higher, or if it just continues straight up from here. Basically everything is at all-time highs, so we'll see. Let's go ahead and extend that out. Seems like that's giving a little bit of resistance as well. Pretty much right at it, so definitely some areas of resistance, but still looks bullish. Moving over to oil and gas and financials, you can see oil and gas had a strong week, 8.27%, right to the level at 140.88. It shows a huge bar, but this was a big gap up and then kind of choppy action in here right at the level. 144.88, if it can break there and push. 145.92 is the next level, and then you got trend resistance up here around the 150 area. This has been a solid base, and I do think that it will continue to go higher once it breaks out here. And then looking at financials, one of the best performers for sectors here, 5.47%, momentum bullish, RSI bullish. It's extended at a 73.03, but this is all-time highs, price discovery for financials. Big impulsive candle, and I would expect more continuation higher. Again, nothing really to work with, just very bullish. Moving over to wood and oil, you got wood staying slightly positive through a big wick. Couldn't hold these gains. I was hoping that it would. Pushed up to VWAP, pushed up to the 9 EMA, and then rejected from there. Ended up consolidating right at the 200 SMA at 80.66. Momentum still slightly bearish. RSI still slightly bearish. I still want this to be a breakout retest, and I think that it can. It's just being patient here. And then looking at oil and gas, this actually looks like a really good setup. So you can see rising higher lows over the past several weeks, and you can see it looks like a very similar setup to here where you eventually get this kind of big breakout style move. I think that that's how it's going to play out. We did have a positive week, 1.28%. I think this is going to do a similar move here. RSI looks good as well. You can see the breakout, retest, breakout, waiting to see if this continues to kind of ramp up here. I think that it will. I think oil and gas, oil futures specifically, here look pretty good, at least for a push up to this trend line around the 77 area. Moving over to RIOT and Marathon, you got RIOT up 35.7%, very, very powerful, push through all these levels, still looking for that 14.18 level. You can see that takes you back to this low consolidation from this double top before we had this bigger breakdown. Now you have a dip down, very powerful bounce from there, push through all these levels. I would expect to hit that 200 just based on how it looks right now. But like I said, 14.18 is my near-term price target. Momentum bullish, RSI bullish. And then looking at Mara, similar setup, but just doesn't seem to be moving in the same way. broke my level 1878, still was a strong week at nearly 20%, but I want to see this kind of ramp here. Momentum and RSI are both bullish, but it's just not moving the same way that RIOT is. Moving over to Breadth, strong week for Breadth on both of these, 88.25 and 34.86. You can see 50-day does not show nearly as much bullishness. We're not getting back into this kind of resistance range quite yet. Still looking for that around the 76-68 area, my level 68-66, somewhere in this zone here. Got the 9 EMA there as well, 69-37. We'll see how it plays out. Momentum starting to step to bullish on both of these RSIs. For the 20, it's just barely above the SMA. For the 50, it is below it. So again, I would expect just a little bit more bullishness before we hit those key resistance areas, and then we'll see what happens after that. Moving over to 200-day breadth, you can see up candle here as well, not nearly as strong. Did end up holding that 55 EMA. That's what we were looking for 2 weeks ago. Touched that again, bounced here, back into the same consolidation range we've been in for a very long time, 69.38 up to that 76 area. This was a high, lower high, and now you have a low, lower low. Is it going to be another lower high and then a breakdown here? Certainly a possibility. Breadth hasn't been dictating market price very much, but eventually it does. Breadth always matters eventually, but in the short term, again, looks a little bit bullish. And then moving over to the dollar here, you can see wide ranging candle, ended up positive, hitting this level here. We've been watching this as a high, lower high, lower high, with a low, lower low. Now we're here again, waiting to see if this is going to be your top. Touched that level, rejected, stayed positive, still above my 104.4 level. Didn't quite touch 105.5, so we'll see. Momentum and RSI still very bullish. This is continuing to stack candles on the bullish side for the weekly chart. So we'll see if it ends up here as resistance. If it pulls back, that gives equities a little bit of strength. If it continues to rocket higher into these zones, that tends to be very bearish for equities. So we'll see. Right now, everything is going up. That is not usually how it goes. But for right now, everything looks a little bit bullish. Moving over to bonds, you can see both of these had a pretty good week. J&K up 1.39%, very, very strong. Held the higher low, didn't even touch this consolidation range. 95.61 level is what I was watching for. Didn't touch it, ended up pushing here. Broke 96.51, pushing back to the 97.69 level. At this point, I would expect a touch of that 200 up at 97.96. We'll see how that plays out. And then looking at TLT, big wick rejection. So it wicked a huge low. Low of the week was 89.55, just short of my level, 89.16. Momentum stepping to bullish, big volume on the week. I think this is going to push here. I do like it. I've been watching this level 98.82. If it pushes here, I'm probably going to look for a little bit of a bullish move here on TLT. So both of the bonds markets looking pretty good. Again, nearly everything looks bullish, which is weird, but for now, that's how it is. Moving over to the VIX, you can see the VIX did crater, broke all these levels to the downside, down 31%, right back to my level 1470 after breaking this consolidation here. So we're in a zone of support. Interesting. We'll see if it continues to push down to that 1275 level, back into this consolidation kind of grinding, kind of melt up range down here. We'll see how it plays, but for now, zone of support, but still looking like it's going to break down in my opinion. Momentum bearish, RSI bearish. Moving over to my accounts, I managed to make about $2,000 on the day, which is pretty good. On a percentage basis, not super great considering the NASDAQ was up about 5%, but I outperformed last week, so this week I underperformed a little bit. That's usually how it works out. When the NASDAQ is down, I outperform. When it's up super aggressively, I don't generally profit nearly as much, but either way, $2,000 on the week, certainly not a bad week, can't complain. In terms of positions, IWM at 238, watching this one closely. We talked about it in the Friday video. It's kind of in a consolidation range, despite the very powerful move. Could be a pullback in time, want to see the continuation. Right now I am playing it pretty bullish, looking for a dollar credit there, and then looking at the IW, and then looking at the Qs here. Covered call for 505 for the end of the week. Max profit is 515. Current price is right around there, 514, so not a whole lot of upside potential, but I am concerned about a potential round trip of this move and then a continuation higher. So right now, a little bit cautious, but not too crazy. Let me know down in the comment section what you think the economy is going to be doing. Is it going to stay strong through this cutting cycle, or will markets eventually turn down? Obviously, they eventually will, but let me know what you think. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.